TJ, the Wheel Deal, coming at you live with Tevis from Fundamentals of Investing with another episode of Wheelers. What's going on, Tevis?
How's it going?
Or should I call you Wheeler, Tevis? What's going on?
Hey, man, I think at this point you can call me whatever because I have been doing it exclusively now for several weeks and I'm loving it.
So tell me, man, I know it's early. This is the first 2 or 3 dates in the relationship. Things are good. Y'all are calling and texting, and I love you. No, I love you more. You hang up. No, you hang up. This is where you're at in the relationship. Nobody's cheated yet. You know what I'm saying? Nobody's cheated yet. So talk to me though, because there's always flags, cautionary flags early in a relationship that we ignore because we're just like, they're going to go away on their own. And whenever you start a new strategy, there's those flags right away. So talk to me about the good, the bad, the ugly, and the indifferent. The floor is yours.
I think, okay, so a couple things. Absolutely. It is at that point where it's very much a honeymoon phase. Haven't had my heart broken yet. It's something that I'm just doing weeklies exclusively, like pretty much exclusively, unless I have to roll out. And I have had to roll a couple of times, which I'm learning more of because the first couple of times I just didn't roll and I just got called away. And I realized, oh, wait, I should have probably rolled because it doesn't make sense. So learn that lesson a little bit the hard way. But also the good is that by doing weeklies with the time duration being so short, I feel as though every day, because I have a stockpile of cash on the side, I can get a higher percentage because if we're green, then I close out my cash secured puts and I write covered calls. And if we're red, then I do the reverse and they'll move disproportionately because there's no time value left on them. They'll expire really quickly. And so that's essentially what I'm doing. The premiums are smaller, but at the same time, like I feel as though the risk is smaller in this market where things will just like fly up. Like I don't want to, I'm really scared to do SoFi 19s or SoFi 20s because in 2 weeks it can hit 20, you know? And so, but I'm not doing it on SoFi at all because the premiums are just not there. And I just don't want to get my shares called away. I did it a couple of times and I had to roll both times on SoFi. So that's the only one that I'm like negative on essentially, or like flat essentially. But everything else, like HIMS is, I love it so much because this thing fell 30% in a week and I got like a 7% yield off of cash secured puts in a week. And it's definitely by far my highest in terms of returns. And then you got your usual suspects. You got Tesla, TSLL. Lemonade is actually one that I'm writing a lot on because same thing. The premiums are just juiced up. This thing went from $18 to $50. And it's a company that I have begun building a position higher in because I listened to their investor call. I listened to their, earnings results that just came out recently. And then obviously the miners, CleanSpark, Marathon. Also just days where there's no volatility, where it's kind of flat. I'll just go QQQ and I'll write on like like 2 days out, and then collect a couple $100 there just to sit and park my money essentially, just so I can get some rate of return. I think the bad, and this is something that I'm realizing is my tendency and I want to reel it back, is that I'm definitely going for more premium chasing, which is not good.
You're premium drunk.
Yeah, exactly. I'm like, free money is out there. But I'm trying to keep it relatively within a range of stocks that I'm comfortable owning. And then like this week, for example, I didn't get an opportunity. And so I sort of broadened that range out a little bit in terms of, what I did, because Tesla was essentially flat and the premiums were not all that good on Tesla. And so I'm realizing that, okay, wait a minute, if I'm treating this as a business and if I'm keeping like, 100, 200 grand on the side to write cash secured puts, then I feel a lot of FOMO when the market is running and I just have my cash on the side, not gathering anything, even though the week before I might have locked in 5% or I might have locked in, 4% or whatever it may be. And so that's something that I'm trying to get a grasp on is how do I balance, a good premium versus like the risk you take on for that premium. Because right now I'm looking for like 1% a week on risk capital. And that's generally like sometimes that's good because that'll be way out of the money, but sometimes it's not that good. And so I'm just trying to, I think, broaden my range of companies that I know are fundamentally sound and seeing which ones have higher premiums, right?
Gotcha. So a couple of observations, if I may.
Please.
You are what I call in the wheeling horse stages, where you don't exactly know who you are in the wheeling marketplace yet, and you're basically willing to bang anything and everything that'll take your thing, and you'll do it. You'll put it in there. You hope that it's not a light socket, essentially. Like that's kind of where you're at. You're like that teenager that went out a couple of times. You found backseat Betty that said yes, and now you want everybody to be backseat Betty. So eventually you're going to get burned. So let me offer you a little bit of words of wisdom of somebody that's probably made every mistake in the book and even invented a few of my own.
Yeah.
You need to find your five.
Yeah.
You need to find your five, brother. You need to find 5 stocks that no matter what happens, they're the first 5 stocks that you look at to sell puts on because you are already either have a position in them. So the name of the game is to lower the adjusted cost basis to 0. That is the big game that we're playing. We're premium chasing. We're cash grabbing along the way, right? Because we need to create cash flow for our little hamburger stand. But don't ever forget to play the bigger game, which is lowering your adjusted cost basis to 0, because we want to learn how to own shares with other people's money. I know you're Canadian, but that's the American way.
Yeah.
The American way is pay for shit with other people's money. It's called credit. In this case, it's called premium. You can pay for shares with other people's money via premiums. So before you start cheating on your wife, if you will, on your 5 wives, right? So let's say you're Mormon, you're able to take on 5 of these bad boys because you can afford them and you got something really special going on, because I can't even handle my wife. I don't know how those people do it. But let's just say that you can handle 5. You want to make sure that you've got the covered strangle going on these 5. Do you know what the covered strangle is yet?
No.
Okay, so essentially you own shares.
Yeah.
You've got your covered call on. And then you've got a cash secured put on, theoretically on the same date, different strike prices. That way, mathematically, it's a certainty that you're going to be winning one side and you're going to manage the other side.
Yeah, I've done that so far.
And a lot of people do it on accident. They don't know what it is, but it's just good. It makes sense, for people that are numbers oriented, that are mathematically oriented, if you will. They're going to land on the covered strangle by default. So you have Tesla. You're like, okay, I'm going to have covered calls on Tesla at, I don't know, 350, 375, whatever it is right now, right?
Yeah, I'll just give you a concrete example. Last week, I was at 375 covered calls and 305 cash secured puts, and it was like 340 trading. So that was basically it for Friday expiry, like same day. Right.
So you have the covered call on, but then you also have cash secured puts on. So it does 2 things for you. It's bringing cash flow the door both ways. Covered call premium, cash secured put premium. But what it does is it gives you more staying power on your covered call, because if your covered call is getting challenged, guess what's not getting challenged?
Your cash secured put, yeah.
If your cash secured put is getting challenged, guess what's not being challenged?
Yeah, your covered call. You can
mathematically, you cannot be losing both. Both things cannot be true at the same time. In this case, I know in some cases you can make arguments that it can be. In this case, it's 1 + 1 = 2. This isn't any of that Chinese arithmetic stuff where you go into the car lot and it's like, we're going to go at 10 and 12. We're going to meet at 11.25. We're not going to do any of that shit. Not a Chinese auction. So you sell the cash secured put, you bring premiums to the door. You sell the covered call, you bring premium through the door. That way you can see the covered call through a lot more, because I don't know how much money I've left on the table rolling covered calls prematurely, or just panicking and buying to close just to find the stock drop again. And then now I'm angry all the way around. You know what I mean? Because you're playing price wars with the market, and oftentimes that doesn't really work out either. Yeah. So I would say find your 5 and run and graduate quickly, dude. I'm talking about get your diploma right now. You're like at elementary level. Like, yeah, I'm trying to get you to the diploma, the high school and college level, and run the covered strangle on your 5, whichever those 5 may be. It sounds like Hims is one. I know that Tesla's one.
Tesla's, yeah. I don't want to run it on
SoFi. I would say SoFi is one, just based on the things that I know about you and how you trade the market. I feel like I know 3 of your 5.
Yeah, those are on my list. And then I think the ones that I'm running right now are stuff that I'm just trading essentially. Like I don't want to be in them for long term. So they're not going to end up being like, hey, the ones that I roll with. I think right now it's and I don't know, this is a question for you, because I'm doing such short time frame. There are times where I can't find a good entry, or I can't find good opportunities on the core 5, and that's the thing that forces me to take like bigger risks.
Mm-hmm. So what you're saying is like SoFi kind of like in a holding pattern for you. You're not necessarily that excited about selling puts to gain more shares at these levels, correct? Because you know too much about the company and you're happy with your position, correct?
Here's the problem for me, TJ. Because I have tax haven, tax sheltered accounts, and I have taxable accounts, I can write cash secured puts on the taxable account, but I cannot write cash secured put on the tax haven accounts. I can only do covered calls. And so it's a little bit Frankenstein, because in the tax haven accounts, I don't want to let go of the shares. And so I'll go far out of the money, like, 10 delta, let's say. But in the other account, I'm like, screw it, I'll go 30 delta, because I know I can just write on the other side next week and play both sides of the equation, right? And so it's very difficult for me, because if I lose, let's say, my SoFi shares without managing that position, without rolling it out, or without being forced to, let's say I get my shares called away at like 16, well, hell, then I have to buy back at 16, because I can't wait via cash secured puts. It's not an option for me in that account.
Are you able to buy long calls in that account?
I can buy, and so this is what I've been doing. So for positions that I don't want to hold, so the miners for me are a trade, because of, what we're going to talk about with Bitcoin and whatnot. And so what I've been doing is I bought a core position in Marathon, and I bought a core position in CleanSpark, about 15 or 20K or whatever in each. And essentially I wrote covered calls on both, and I bought calls on both of them. And so now I'm with that covered call premium that I'm getting through the door, I'm buying more and more calls, but the calls are like, April, March, February, further out in time. So I'm doing that with SoFi. I have leaps, and with Hims, I have leaps and short-term calls, which are up significantly.
Gotcha.
So I am playing both sides. It is more of like a risky bet. Like with Marathon, for example, I just closed my January 2025 calls today, and that was like 70% in profit. And I only opened those with covered call premium that I collected over the past like 2-3 weeks. And so, I just double dipped essentially in terms of collecting that premium and then putting that premium to work to make more on the buy side. Which is risky, I get it, but essentially that's how I'm trying to do it for positions that I'm not so like. I know I don't want to be here long term. It's a cash grab. I want to be in and out essentially.
Gotcha. So right now we did land earlier on Tesla, Hims, and SoFi. Do you have 2 more like gun to your head right now that they needed to be in your 5? Who would those 2 be?
I mean, TSLL is the other one that I'm writing on, but that's pretty much Tesla.
That's seriously Tesla, yeah.
Yeah. Lemonade is one that I'm writing quite a bit on, and then the other 2 are the miners. And then I'm just looking, because I just broke it out here by everything that I've written and at like a P&L. Mm-hmm. And so Hims is number 1, Tesla, TSLL, Lemonade, and then CleanSpark, Marathon are the other ones.
Gotcha.
And then QQQ is really the other one, because it's my holding pattern. If nothing's moving, I just go QQQ.
Gotcha. And do you have ranges of where you're willing to sell cash secured puts? Like for instance, SoFi, like cash secured puts at 9, like load the boat at 7 for me. And I got to make these adjustments, right? This was a quarter ago. Like Riot was 9 and 7. I recently moved it all the way up to 15. Like, as long as Riot stays under 15, I'm going to be selling $1 million worth of cash secured puts because I already put cover calls at 20 that at some point I'm anticipating are going to be underwater. So I'm trying to collect credits because I might have a massive debit on my hands down the road on the cover calls if I'm not okay letting the shares go. Because when I first sold the cover call, of course, like every other time I've done it, I'm going to sell these shares for real this time, right? Swear to God, swear to God. But when push comes to shove, I'm a share hoarder. I hoard my shares. I guard them. I don't know why I love shares so much. It's more tax efficient and capital efficient. It feels like to not own the damn shares.
Yeah. But, so for me, like I realized that we're in a melt up type of stage in the market right now, especially going into the end of the year. And so the ranges get all wonky because it's not like SoFi is trading in a range bound with a $2 spread for the next 2 years. Like it's moving $2 every week basically, and so your ranges are going to get absolutely messed. So what I am doing is I'm sort of letting the delta guide me somewhat in the short term, and forming my own ranges based on that. So for example, right now I'm actually running the now that I know what it is, the covered strangle on CleanSpark. So I have 1250 cash secured puts expiring on Friday, and then I have 17s, I think, covered calls for CleanSpark. And so we'll see how that goes. And so essentially that's my range, but I want to fully let go of my CleanSpark at 20-ish. My entry point is, I think I bought a bunch at 15 and then I bought a bunch more at 13-ish. So it's about 14. I want to let it go at 20 or low 20s. And I want to let my marathon go at, I have covered calls for marathon at 30. So if that hits, then I'm letting it get called away and I'm not going back in because that's my trade essentially. I went into marathon at 20. If it gets called at 30 and I collect premiums for 2 weeks or 3 weeks while I'm waiting, then dude, that's a fantastic return for me.
For sure. So what do you like the most about wheeling so far, and what do you dislike the most?
Ooh, interesting. So I really like the fact that I feel as though my portfolio is working for me. It's actually, I don't feel a pressure to deposit money from my bank account in my portfolio right now because I am generating some income from wheeling. And I feel as though, I tune in every day and I sort of look at the technicals much more, and I'm reading much more about technicals, and I'm trying to learn how to do technical analysis and finding, levels. What I don't like about it is that it keeps me way more glued to a screen than I would have otherwise been because, also the broker fees here in Canada, they add up really, really quickly. It doesn't matter for me because it's just a percentage of the money that I'm locking in, but I just, I added them up and I've paid quite a bit so far because I'm essentially putting on a trade like every day of the week, either closing something or opening something, because I'm playing such short time frames because I'm really scared of parabolic moves if I go longer time frames. And I don't trust my ability right now to be able to essentially babysit a position if I'm sitting on it for a month and then it just does like a 2x overnight. And that's what I'm scared of in this market particularly. If the market cools down, then I might, feel a little bit more flexible. But I've only had maybe 1 or 2 times where I've been nervous about getting hit, mostly because I didn't know how to handle it. But other times I'm kind of okay to be hit because I'm just treating it as a business.
Gotcha. So what you're saying is your portfolio has turned into the net new funds.
Yes.
Right? Because when I started doing it, there was a term that I started coining, and it's going to be in the book, so hopefully people don't steal it from me. But I felt like selling cash secured puts and cover calls successfully was essentially like an artificial injection of cash into the portfolio.
Yes.
It's like, where did this deposit come from? Because on the next round, now I got more money to work with. And on the round after that, I got even more money to work with because the premiums start compounding when you start learning how to do this right. And that is how the portfolio starts multiplying, and people cannot do math. And I'm like, dude, I get 3 to 4% in premiums per month. I get about 2.5% in premiums to stick, cash stick. I got cash flow, and then I got cash stick. So if you know how to do any type of math, that's about 25 to 30% in premiums, cash stick per year. In 3.5 years, compounding is really closer to 3.
Right.
The portfolio is doubling if the stocks that I own just stay flat. If they go down, it's going to take a little bit longer. If they go up, it could happen every 2 to 3 years. And
Right.
this thing, that's why you saw this thing at 5-6 million. Yes, there's been some injections of cash as well, but
Right.
also what people have yet to comment on my portfolio, aside from the real OGs that have rocked with me, bro, this happened because of the way I played the market in 2022 when everybody else was flying home to mom. I built these positions in 2022.
Well,
and I reaped the rewards today. I had shit on my face for about 2 years.
Yeah.
All this opportunity costs, all that shit went away in the last 3 to 6 months. You know what I mean? But the premiums were steady the whole time. And now all of a sudden, oh, TJ's this wheeling genius. Dude, I'm the same guy. The portfolio is just a lot bigger because the strategy worked, because the stocks that I picked finally started performing, if you will, like the rest of the market had already done for a while.
Yeah. And I think that's the thing. I mean, you asked what do you like, is that, I realized that one of the things that I did wrong in 2021 was that I got really happy about paper gains, and I didn't realize how quickly those could evaporate. And they did in 2022 and part of 2023. And I averaged down, and I'm doing, very well right now. The portfolio is at all-time highs, but I think that I feel psychologically better here because even though I might be locking in, even if I'm locking in some gains and missing out on a bigger run, like locking in gains, I think is an important part of the process that many people, like, it's under appreciated because everybody is like screenshotting their paper gains and I'm like, okay, well, how much like is actually yours? Because that can go away. And that has been my personal experience. Like, it has gone away. Like, I didn't sell Tesla at 414 in 2021 when it hit that, but I was buying more in the 200s and my cost basis was like in the 100s. And so like I still did very well, but at the same time, I could have done way better if I had been doing this for years because I would have been locking in gains throughout the way.
I think that what you've learned is something that I didn't learn until doing this 2 years full time. So you're a little bit faster than I am. Is I just learned that realized gains is greater than unrealized gains.
Absolutely.
And if you can compound those realized gains, then you can also withstand the roller coaster that is the market. Because riding stocks up is fun. But if you're not willing to sell them at the top, like a lot of us are not, because we're long the stock, we're going to ride that roller coaster all the way back down. But if you collected some premiums along the way, it makes that ride down even more exciting because you have dry powder always to buy that dip. And then the next rip's going to be even more exciting. And bro, it's just, it's instead of a vicious cycle, it's just now a cycle.
Yeah, it's a virtuous cycle.
Yeah.
I mean, look, but at the end of the day, like, even if you're not like, I understand that perspective of, hey, just repeat this process to lower your adjusted cost basis to the point where you can get to like a negative cost basis, whatever. Sure. And I think that with enough repetitions, that's the thing that I'm trying to I'm going to be optimizing over time. But even right now, the way I'm looking at it is, okay, well, if I collected $300 in premium from Marathon because I entered it at 20 and I'm okay to let it go at 25 and I have no emotions around that, well, I can then just go right back and I can put that $300 into a January call option, which I did. And if that goes to zero, then I'm like, okay, well, I didn't really lose anything because it's house money. But if that goes higher, which I mean, I closed it up 70%, right? It's like, okay, well, fantastic. I just essentially am buying free lottery tickets for the stocks that I want to be owning. And then I can get rid of my Marathon position, move to another stock that I'm more conviction and more long-term on, but I still have those little lottery positions in the form of leaps with, I mean, theoretically unlimited upside potential, right? So I like it from that perspective. It makes me sleep easier at night, I think, from that perspective as well. Because like I did it for SoFi, I took the premium and I bought a couple of leaps for 2026. And then I had to, roll the SoFi calls and whatever. Like I ended up neutral on those because I just got a very, very small net credit because I rolled out like 3 weeks. I still have the leap, so I like that perspective as well.
Let's talk about the books, because the other thing that I wish that I could have done earlier on was keep good books. So, a lot of people know that this gentleman, the angel of the channel, Troy Hutch, gave us the wheel tracker. And then Bill White put it on steroids.
Mm-hmm.
We talked about making it an app. You've reached out to me as well. So there might potentially be a big collaborative effort. I don't know if I just made up a word or not, but there may be a big collaboration going on to try to turn this thing into something that we can like legit offer the world. You know what I mean? I'm hoping that I'll be able to be a part of it, hopefully, but I feel like I'm one of the bigger names in the wheeling business, but it doesn't matter to me because I'm not about that. I'm about just loving life and loving God. And at the end of the day, life works out the way that it's all preordained anyway. So that being said, where are you at with your books? Because I'm going to show you something that I created day one, because I knew that this game was just a game of credits and debits.
Yeah.
To keep me emotionless, non-emotional, because the one thing about my original tracker is I call it the portfolio snapshot now, is it doesn't have any tickers.
Right.
And I'm going to tell you why, because of the way that I look at my hamburger stand. Because the minute that I put tickers on there, and that fucking tickers, Tesla, SoFi, or my beloved Riot.
I get it.
Bro, it totally mind fucks me, Tevis.
I get it. No, I totally get it.
So let me show you my portfolio snapshot, and then I want to see kind of what you're working with. So
sure.
what you're working with, and then that way we can make sure that you're on track with that, and then we can also just, because offline we're going to talk about the tweaks that we can do to the tracker to make really put it on more steroids.
Yeah.
So let me see if I can remember how to present. I've only gone live a couple of times this week. So I have here the portfolio snapshot. I don't know. Is that a little bit bigger or no?
Yeah, that's good.
Okay. So essentially what I have here is deposits since 24. That stuff's kind of irrelevant. It all starts here with the first trade of the year. Got 1,800 in credits. These are the debits that I paid out. Leaps, so credits are green, debits are red. Anything that costs money is red. Anything that makes money or worth money is green. Unrealized, I just have those in neutral and black, if you will. So I have credits, debits, I have leap cost, leap value, unrealized P&L on the leaps. I got total share count, I've got share cost, and then I've got total invested for the shares. So that's a red number. The current market value of those shares is a green number. And then the unrealized P&L, I just leave that one in black because I don't know how to color code it, that if it's positive, it's going to be green. You know what I'm saying? I don't know how to do that. There's a way to do it. I got to get Bill White on the phone. So I don't know how to do that. So I just rock with it this way. So that is what I have. And then I just go down, dude. This is every trade for 2024 and all the credits on the left and all the debits on the right. So there has been a shitload of trades this year. So this is going to go all the way to like 710 or 15, I think. Probably going to end up at 750 by the end of the year. I had this ending at 700 and I already pushed it back to 720. And I'm hoping that I can finish here. I don't think that's going to be the case. Next year, I'm hoping that it's only going to be 500 trades on the credit side of things. On the debits, the reason I have so many debits is because when I buy a leap, it goes into the debit column. You follow me? So this 900 is part of that 4 million. So it wouldn't be so bad. So I look at a metric. I look at, okay, so there's been 6.25 deposits. Now, granted, about half of that money came in throughout the year. So I really only started the year with about half of that money.
Right.
But I was still able to generate 4.678. This is up to date in credits. Now, I did have a shitload of debits because $500,000 of that was from buying leaps. I bought $1 million worth of leaps this year, give or take.
Right.
But the good news is those leaps are double in value right now. And then obviously we're doing pretty well on the shares, right? Paid 5.6 and they're up 8.7. So that part's doing good. So that's the way that I keep my numbers, because I have a metric that I got to hit. And my metric is like next year, I feel like the portfolio is going to start off at 11 to 12.
Mm-hmm.
And the metric that I can control is 25% cash stick. So whatever, let's just say it's $12 million if Riot goes on a run by the end of the year. So if I hit 17 or 18, the portfolio is going to have a 12 in front, right?
Yep.
So I'm going to take that number on January the 3rd, whenever the market opens again in 25 or the 2nd, whatever it is.
Yep.
And I'm going to multiply that times 25%. So whatever that is, you can help me out. I feel like it's about $4 million.
3 million, yeah.
3 million. So you see, I'm making it harder on myself. So that is the number, rain or shine, that I need to get on the cash stick side of things. So my net, so the number between here and here from the credits and debits has to be 3 million next year. So that tells me that there's not going to be a lot of room for buying leaps next year.
Interesting.
If I want to hit that metric, right? Because I'm running my hamburger scan. Like, in other words, I look at it like I'm the CEO, I'm the CFO, I'm the general manager, I'm everything. I got to go report. I got to go report to the board. I want to keep my job. And they're like, hey, you need to bring us 25% in cash stick.
Yep.
Because that's a number that you can control based on how many puts and calls and rolling when it makes dollars and cents. Now, don't come at me with unrealized capital appreciation. Don't come at me with, well, look what my leaps are worth. Did you sell them? No, well, they ain't worth shit right now.
Right, yeah.
They're expiring. They're an eroding asset because of time decay. They know the game too, right? These are the games that I play with myself.
Yep.
So I am just constantly, dude, that is the number that I look at. Whatever that is, EC 720, whatever the hell that number is, the 4.6. That number, I am trying to get it to 4750 by the end of the year. So I'm running out of time.
Gotcha.
So the only way that I can get there when the numbers get bigger, and I think this is the issue that you're already running into, Tevis, is you need to have a watch list that's a little more expansive.
Yep.
So if you I like Riot. Well, there was a time that I also liked Marathon and Clean Spark and messed around with Cypher and Iron and BIT bit farms as well.
Yep.
Because I needed a sprinkle everywhere, kind of like what you're doing. It's pretty natural to be premium drunk and a little bit of a wheeler whore initially.
Yeah.
But whenever the share counts start getting bigger, the reason I don't go like a butterfly trying to pollinate everywhere is because I also have a huge share count and I have to try to lower that adjusted cost basis to 0. So I stopped playing that game and I'm like, dude, Riot, you're one of my 5, bro. You need to be able to get me this premium.
Yep, I got you.
You know, so I'm just saying the game changes. And the reason I'm telling you this stuff is because it's going to morph for you as the portfolio gets bigger. You start thinking like, whenever I hit 10 million here, dude, it changed for me.
Yeah.
I don't want to be the guy that used to have the $10 million account. So now I got to also figure out how to protect this bad boy. So now I'm trying to, how can I take shares off the table? Buy leaves. That's going to have less of a drawdown. And, you know, like I started looking at all this other math that I wasn't even considering before. So there's just other things. Like I'm just trying to give you shit that you're going to deal with in 2 to 3 years so you can look back on this conversation.
Well, so I started tracking all this stuff ground up. You know, and I use Google Sheets right now, and I've had this sheet that I've been using for like the past 7 years, and it has everything hooked up to the Google API, and so essentially everything updates automatically on a daily basis. And this is the piece where we're thinking about throwing that on an app where it's just easier, because right now a lot of the stuff that I'm jotting down is all the way down to like the deltas, because I want to see, okay, how far out of the money am I writing? What's the delta? And how often did I get hit out of my last 20 trades on that delta? And so I can just mentally create a probability of like, hey, I wrote at a 10 delta and I got hit 7 times out of 20. Maybe like versus this other stock, I wrote at 20 delta and I didn't get hit. So essentially looking at that volatility. I'm also looking at returns per stock over time, like P&L, and I'm also looking at returns per month in terms of percentage. But for me, I really look at it in the form of, okay, am I getting my percentage return? And is this stock, like if you have a watch list of, let's say, 10 positions or 20 positions, like forget your 5. If you have 10, right, that are all fundamentally sound companies, and I'm sure we can name 10 companies off the top of our head, like Amazon, Tesla, whatever.
I have them I have them here, I think. Yeah.
There you go. Then that gives you a wider range of probability for you to reach that percentage return that you want. And I just break out my capital into smaller chunks. Like right now, I don't want to share my screen because I have actual numbers on here. I'll share it after, we go off. But right now I have 1, 2, 3, 4, 5, 6 cash secured put trades on, and they're each like, small chunks, like 20K, 30K, 40K, whatever. And I'm not throwing my whole nut on one position because I'm diversifying that risk, but I'm not diversifying essentially the percentage return because I'm fundamentally bullish on all the underlying companies. And so on any given day, not all of those 5 or 6 companies are going to fall the same. Not all of them are going to rise the same. And so that gives me optionality in terms of where I want to allocate that capital to get that same percentage yield. And that's essentially what I'm tracking here. I'm monitoring the open positions. I'm monitoring the percentage over time. I'm monitoring the percentage by position, and I'm monitoring the delta versus the time so that I can determine, okay, is there any correlation here? And what is the money that I'm getting? And then I'm also keeping on the sides this like separate sheet, which is like proceeds. And where do the proceeds of these trades go? Whether they go back into this machine or whether they go into long calls or whether they go to closing out other positions so I can have the cash stick, as you say. And so that's going to be a little bit more difficult to calculate. But I think at the end of the day, if I can find a way, and this is, maybe a teaser for the app for people that are listening, the whole idea behind it, and it's essentially myself and a friend who's helping on the development side, and I hope we can work together on it. But essentially the whole idea of it is, okay, if I have that fundamental logic in place of, hey, here's my 10, and I've pre-selected this list of 10, now here's my parameters that I'm looking for. I'm looking for under 20 delta, 7 to 14 day, and I'm looking for, let's just say, let me just go here for 1 second. Yeah, so if I'm saying like, hey, I'm looking for under 20 delta, I'm looking for 0 to 14 days expiration, and I'm looking for a premium yield that's 1%. All of a sudden, out of my 10, this is the pool. Find me the best strike prices that meet those parameters and do it automatically based on whatever the option is trading at any given time. It cuts all the manual effort from my end, and it really automates all the stuff that I've already been doing here. And I think there is a benefit in, me going in sort of blind into this and working through first principles, like building out this tracker myself without having any other points of reference, because I can then start to logic through, okay, I can do, show your work in terms of the math equation. Like, how do we get from here to here? What am I tracking? And so one of the pieces that I'm really not over indexing on right now is adjusted cost basis, because I'm flip-flopping all the time. I think once I hone in terms of like my 5 or my 10 or whatever, at that point, it becomes a game of repetitions and it becomes a game of adjusted cost basis. But right now it's a game of, can I meet my premium so that I'm beating the index? Because otherwise, why am I doing this?
Right. Agreed. Because I definitely graduated towards, these are my menu items, right? So I have Amazon, Intel, CleanSpark, Enphase, etc. Right? I look at them as menu items in a hamburger stand. I've got year 23, 24, 25. And then at the very end, it comes down to the bottom line because the bottom line is the bottom line, right? So it always comes down to row 79. I'm not sure if I'm saying that right. Is that row or column? Help me out.
That's a row.
Okay, row, right? So row 79 for me, and Amazon, since I've been in it, has yielded at the end of the day bottom line, whether it's cash secured puts, cover calls, and or capital appreciation, realized at 196,000. Intel's still negative at 99.15. Clean Sparks made a cool 261,000, and I never owned a share, so probably been the best trade on the books.
So I think one level that I would, and just I'm looking at this blind, so you might have already been doing this, but like one layer that I'm immediately like asking myself is what is the percentage breakdown in terms of the yield by each of those positions? Like that 196, when you add them all up, they can add to your 25% cash stick, but what is Amazon contributing?
Yeah, so it's here. So I have premium dividend, premium interest and dividend income percentage by ticker. So like Riot has given me 26% of my money. Palantir is negative 19.3% because this is in share price appreciation, right? Because I just bought to close a bunch of covered calls negative. You follow me?
And this also includes gains, right? Gains, losses.
Yes. No, but not on shares. This is strictly on premiums because you have a premium basket and then you have a capital appreciation depreciation basket. Those are two baskets on the same stock. So Tesla has brought in 5.3%. NEO is negative 4%, et cetera, et cetera. TSLL is a cool 9.5. Enphase surprisingly was 4.3, and CleanSpark was 8.3. And other is if they're not long-term plays, they're in my other basket. These are the one-night stands. So I just have another tab where I do my little flings. You follow me? But I do track the flings, but they're not consistent enough to have their own tab, if you will.
Look at you writing all your one-night stands on a list, hey?
Well, you got to have the black book.
What a responsible guy.
Got to have the black book. And then I also have portfolio allocation. So this is tracking share ownership and open cash secured puts.
Right.
But then if I want to go a step further, I have investor overview. This is something I don't share with the channel or the members. The members that pay $3 a month. This is for our premium members. They will get access to this. We're just not done with it yet. But we have breakdowns on top of breakdowns, bro. Like this is y'all are getting first hand info here that nobody's seen before. This is exclusively Bill and I. You follow me?
Yep.
Because Bill White is just that dude when it comes to Excel. And so I have the shares, the cost, the market value, the leaps, the sell calls. This is all in negative because that's the market value. Like you got all the premium up front, but if you want to close out prematurely, you got to give the money back, right? So it's a no-bueno number right now. Same on the cash secured puts, and then cash is a position, so it's right over here. So and then you look at the total market value, it's 10.9. This was updated as of yesterday. So I only update this one like every couple of 2 or 3 days because anything in the yellowish color here, the tan color is a manual entry. So there's only so many of those entries that I want to do personally. And then if I look at the actual portfolio, you're going to see that it's pretty close to the actual number. You follow me? Because I didn't touch the portfolio today. The wife's sick, etc. I didn't go live until today with you, so I had to just make some adjustments. But I did make some trades. You follow me? So those haven't been fully annotated into the tracker, or they have to the tracker, but they haven't to the investors overview page.
Yeah. So for me, like, I don't know. We can have a call with Bill as well, because like for me, everything updates automatically right now, and all I have to put in is the actual individual contracts that I'm writing. What is the strike? What is the expiry date, so on and so forth. And then once I close one of those rows, one of those cells, like it just updates everything. So I don't have to like have 8 inputs. I can just do 1 input, right?
No, but this is just like, it's because I run a hedge fund. So this is the page that I use when I meet with the investors. They don't give a shit about any of that. They only care about what did we pay and what is it worth. So we're working on the presentation page. You follow me?
Right.
But like whenever you sell a cash secured put, for instance, like let's just one that I did. Well, let's go to the other because I did one today, I think. Was this company right here, DG Dollar General yesterday. So I sold 25 $65 puts, collected 259. So this is all drop down stuff, right? So here that's a manual entry. This is a drop down menu.
Mhm.
That's a manual entry. You got to obviously type that number in, the number of contracts, the premium, and then you got to put this to either open, close, whatever you're doing. That's a drop down as well, and then everything auto populates. And then whenever you go to close it, like if I close this one here, let's just say today, are you following? Are you able to follow what I'm doing right here? Do I need to make it a little bigger? So
Yeah.
there's the Dollar General one, right? So I sold it. So then now if I wanted to close it, let's just say, for instance, I wanted to close it today, and then I gave back, I don't know, 159. Then it's going to auto populate everything, close out the trade, and then I just do closed. And then here it's going to tell me my debit and the profit, right? So the credit was on this side, which was 64.75. The debit was 39.75, leaving me with a net profit of 2,500. And all of that will go to the overview and the summary pages as well. If that makes sense.
Yep. No, it makes perfect sense.
So yeah, so this thing does it, bro. And this is open. There we go. And here it tells me like what the put collateral is, and so that because you want to know, well, how much money is it taking to make that kind of money, right? So you have all of that line item as well. But then this overview page kind of gives you an idea of like where you stand right now. Like you can just look at it. Total deposit is 62. The brokerage cash is 29. The share market value is 86. Total invested capital. Bill has explained that number to me a couple of times. I still don't really know what it means. Then we have margin used is 2686 because if you look at the put collateral, it's 5652, but that number exceeds the brokerage cash. So we're technically using that much in margin, if that makes sense. So that brings the portfolio value down over here because this is assuming the worst, that everything's going to expire in the money and we're going to be fucked, essentially, right?
Yeah. No, I have something similar. Right now, I'm sticking with like I do the margin, but I just do it on QQQ. Really. And always because QQQ, I can close it out in days, whereas I have some calls that are or cash secured puts that are closing in weeks, and so I can always manage it. But yeah, I have something similar.
And then the issue here is like my total call premiums all the time are now negative because coincidentally, that's about the amount of money that I spent on the leaps. So I've essentially always just been break even on calls because I've always rolled them and at some point I just buy to close them because I found that for tax harvesting, one of the easiest instruments for me to close out is covered calls. Because I don't really have like a lot of, not to like toot my own horn or anything, but I have like a lot of shares underwater. But sometimes I have covered calls underwater and I'm like, hello, that's my tax write-off. You follow me? So that's just been a strategic thing. And then that's why the net put premiums look so ridiculous. So that's why I've been trying to like get the cash up because I can just make a lot more money selling cash secured puts and taking a lot of the volatility out of the portfolio. And again, the summary page just kind of gives you a lot of this information as well if you look at it. And then it goes, it's pretty neat, dude. Like if we take Intel, for instance, you have all the premiums collected right in 23, 24, 25, which is 71, the open spread contracts, the spread premium, spread collateral, the open call contracts, which is 200 because own 20,000 shares. The open call premium on the current contracts on the table was 19,200. The total call premiums is 27. The potential call market value. So if the shares were to get called away, they're going to bring in $560,000. The open put contracts is 300. The open put premiums on those contracts yielded 52,300. Total put premium is 42,000. So I had closed out some puts for losses as a tax harvest earlier on in the year. So it came off of there. and then in the put value. So all of those cash secured puts are in the money because they're actually at $24 and Intel's like slightly under 24. So it's going to tell you that your open put collateral is 720,000 and in the money put percentage is 100%. So you kind of get an idea of where you're at once you learn how to read those line items, if that makes sense.
How do you go about adding more? Because I see a lot of names here, dude. And you called me like a whore when it came
to. You
to.
got to keep in mind that this is over 3 years, and I've kept the ledger. But now, if we look at the actual portfolio, if we go back over here, are we in the portfolio or no?
Yeah, you are.
Okay, yeah. So I finally landed on 5. And then I have 8. So it's right here. So this is the core portfolio now. So I landed on SoFi, Riot, Tesla, and I have these on equity. So SoFi, Riot, Tesla, Amazon, PayPal, and then I have Intel, which might actually come off of the portfolio if it gets up to 28. I'm considering just getting that cash because I can make a lot more money selling cash secured puts on the miners or something like that versus what I think Intel's going to give me with the same amount of money. I know it's probably safer over there with Intel, but at the end of the day, I got to hit my metric. You know what I mean?
So let me ask you this. For the cash grabs, like Dollar General, for example, like how do you find those? You just go out and you look for, like you just spend time just looking through stuff?
Yeah, so as a hedge fund manager, I have these guys one of them's a gal called quants. And they feed me info, and then I go on X and I have like my little 5 or 6 or 7 follows that are really crucial for me. And I see if anybody's talking about those particular trades. And then I see if anything like matches up or whatever. And then whenever they gave me the Dollar General, I have this intrinsic value calculator that Morningstar created for us. So I type it in there. And then I go on Alpha Spread. I do my own way of doing it. So I do it on Alpha Spread. I do it on stockanalysis.com. I do it on Visual Stocks to see whether or not the numbers kind of like match up. Because it says that Dollar General, the information they gave me is that Dollar General is a steal at $60. But when I went to go do the cash put at 60, I'm like, dude, I'm not doing that. Maybe I'll do it at 65 and roll to 60. So I did a setup trade because if the stock isn't where I want it to be, but I want to be in the stock. Did y'all understand what I just said there?
Yeah.
It's not where I want it to be, but I want to be in the stock. The stock isn't coming to me. I'm going to go to it, right? If you can't bring the man to the mountain, you bring the mountain to the man, right? So I'm going to be like, okay, I'll sell the cash put here, knowing damn well that I really want to acquire down here. And that's why I will make a lot more money than most wheelers out there because I'm willing to sell cash secured puts where you're not. So you're never going to collect the premium that I will. And if the off chance that Dollar General doesn't even hit my strike price, I just maximize the premium that I brought through the door anyway.
Yeah, it becomes a moot point for you because you're well capitalized enough to catch it on the way down and average.
I told you, somebody said a long time ago, only sell cash secured puts at set prices where you want to own those fucking shares. That's rookie shit. That's 6th grade, bro. We're talking about graduate school now.
Yeah, no, I get
all that. That's costing you a lot of money. That's a stupid fucking broke mindset. Forget it. You're listening to a broke dick. Don't do it. I'm telling you right here, don't do it. Not to be a dick. I'm just telling you the truth.
Yeah, no, I agree with you.
So the cash put here and roll it down there if it happens, and now you should be ecstatic. You should be ecstatic because you try to go grab the bucket of cash, the bag of cash, you got caught, you got arrested, right? So now you had to go roll, you had to go do your time on the roll, and then boom, now you own it at 60. What are you complaining about? That's where you wanted it anyway, but now you got a shitload of premium to show for your trouble.
Bro, you're preaching to the choir because I literally did that this week. You know, I had 5 bullets to spend on Tesla, and I just went and I wanted to, like last week I wrote cash secured puts at 305, and the week before that at 305, and then this week goes higher up, and so I wrote one at 330, and then if that gets breached, I have another one that I wrote today at 310, and then if that gets breached, then a 305, 285, and so on and so forth. Like I have 5 bullets to shoot at it. I only spent 2 as it's going down, but I collect premiums all the way through as I average down. So I get exactly what you're saying, and I think it's smart. But just to put my product manager hat on for just a second, and we'll jump to Riot because I put something together for Riot that I want to show you. But So if I can reiterate what you said.
Can I answer this one question right here?
Yeah, go for it.
For MicroStrategy, where's their MicroStrategy? Right here, Gronk. So one, I don't fully understand the convertible bond because I just haven't really taken the time. I did watch a 2-hour-long video that Chris Patel turned me on to. I understand the infinite money glitch. Some Andrew Jink, however you say the guy that does the best editing on YouTube. He did a video on it as well. So I kind of get it. But that doesn't mean that I'm sold on the concept completely. You know what I mean? But that being said, I do have a cash grab on MicroStrategy because I finally looked at it enough and I was like, well, you know what? I don't have to understand it to make money here.
I did that too this week. I wrote 300s on.
So well, you're like way more ballsy than me. So this is again like whenever I'm bullish on the stock, I'll sell a very aggressive cash secured put. When I'm like, dude, I'm like legit cash grabbing and I don't want to manage, I will sell way out of the money. When I'm cash grabbing and I want to manage and I'm okay owning the stock, in other words, you're indifferent, that's when it changes, right? Because it all just depends on the stock and the situation.
Oh,
I sold 5 cash secured puts at $250 for $12.27.
So
brought in a cool $10,875. And I don't know if Michael Saylor is the smartest person ever. I don't know if he's going to be the biggest con artist ever, bro. I don't know.
So
what I do know is that Mr. Market said if you're willing to put $125,000 up for a little over a month, here's $11,000 while you figure it out. So it was a Stanley Druckenmiller invest, then investigate, right? It was that whole deal. And he's the freaking, everybody's Warren Buffett. That's not my guy. It's this other dude because he did 30% for like 30 years.
Yeah. So actually, TJ, you're more ballsy than I am because I wrote 300s for this Friday, whereas you wrote 250s for a month.
Hey,
so
bro, if you're gonna go to jail for robbing the bank, you better go to the fucking safe at least. You're over there robbing the poor cashier that she's got like $5,000 at best, bro. I'm going in there and I'm like, give me the money and there better not be ink in it. I've seen all the movies too. I got hooked on the Money Heist movie, bro. The Money Heist. Have y'all seen it on Netflix?
I love these analogies, man.
Bro, I'm gonna go rob the bank and we're going down hard, bro. I'm going after the whole thing. That bank ain't gonna have shit. You ain't even gonna be able to cash your check on Friday. This is Wheelers After Dark, baby. We cut loose a little bit on here. This isn't your mommy and daddy's Brady Bunch show right now.
Look, man, the MicroStrategy approach I think is really interesting. I'm not saying I agree with it, but I think it's interesting. And I think it's something that all of the miners are going to start adopting. Yeah. I mean, what is Bitcoin right now? Because I think it's going to cross 100.
I got a note when I was at the doctor, dude, that it was like a 95. Y'all could help me out. Something like that.
Yeah, it's at 95.8 right now.
Yeah. I think it'll be fine. Dude, Dallas Matthews said we're good. Dude, you show me the rainbow chart, dude. I'm solid right now. Dallas Matthews got my back, bro. He'll call me. He'll be like, hey, sell everything. I wouldn't even ask the question, dude. I'll call Jason Less. I'm sorry, bro. No. Dallas said.
So I think the MicroStrategy approach is interesting, right? Because what this guy is saying is like, hey, let's do a bond deal. And essentially I hold this, like you give me money and I hold that money for a certain period of time and I don't pay you interest on that money. I think it's 3 years or 5 years. Somebody in the chat can help me out. And he doesn't pay you interest, but he says
5 years. It depends on the bond, yeah.
If this thing goes up 55%, then you'll essentially get those gains. And so the trade-off is, are you willing to accept not getting interest for those years? And then in 2029 coming out and getting 55%? Well, a lot of people are, right? But the idea is that those people that are buying these are fundamentally bullish on Bitcoin, right? And so I don't know, like it's interesting because then it allows him to buy more Bitcoin, lock up more, and that then appreciates his price to the point where like people are calling it a Ponzi because he can just rinse and repeat for only as long as Bitcoin's going up. Because when Bitcoin starts plummeting back to 30,000, let's say, I mean, I don't think that's going to happen. And I think many people these days, people have a short a memory, right? Like they forget that 9 months ago, this thing was in that range.
Yeah.
And so if it does go back in that range, then, it's not going to be.
So I talked to a hedge fund manager that has 10,000 cash secure puts on MicroStrategy. And he said, this is what you're not getting, young man. And I felt complimented at young man because I'm turning 50 years old, right? So this guy is the only billionaire that I know. And he's doing this thing. And he said, here's what you're not getting about the whole thing. So let me explain it to you so that maybe you'll understand. Is Michael Saylor wants to get his hands on as much Bitcoin as possible because he's bullish on Bitcoin and you are bullish on fiat currency. I'm bullish on the US dollar, and Michael Saylor essentially is saying this is the new money.
Right.
And I'm going to have more of this money, and that's going to be the greatest wealth transfer of our lifetimes. And you're not going to have any of that money because I'm over here trying to grab as much of this paper money as possible that they just print and dilute you. You're over here complaining about the miners because they dilute, but you're over here trying to hoard millions of dollars and they dilute you every fucking day at the printer press. And this was a couple of nights ago, and I slept very uneasy that night because I felt like this dude sees something at a different level that I don't see. And he's not as excited of having more billions of dollars. He's trying to get a hold of Bitcoin. And like I'm not a Bitcoin maxi and all of that stuff, right? But I feel like that's the part that just kind of gave me cause to pause a little bit. So I stopped my Michael Saylor talking shit a little bit. You know what I mean? Because I don't know. Like, I think it's just easier for me to say I don't know.
Yeah, I mean, you can't buy conviction, right? He's built it over time, and he's proven it with his actions, right? Like he owns like over 17,000 Bitcoin, like something ridiculous.
Yeah.
And so I like his analogy. I think it's fundamentally sound, like it makes sense, but at the same time, like you can't see the future, right? If people say, hey, Tesla's going to be the largest company in the world and autonomous robots, and they're going to sell 1 billion units, and like, cool, it all sounds sexy. I'm sure I'm going to be rich as a result of it.
Right.
But I can't visualize that world. And I think that's probably what sets me and Michael Saylor apart, is that he can and I can't, and he's probably going to profit way more than I am as a result.
I hear you. Do you want to segue into Riot?
Yeah. Okay. So for Riot, how much? I'm curious to ask you a couple of questions, actually.
So what I want to do to preface the conversation, and the reason that I'm interested in potentially launching a Riot weekly or bi-weekly or monthly, however often we can get into it, is because Riot has become a very sizable position. And what I'm about to show y'all is about 10% of the position. Because like this isn't all the money. You follow me? Like this is just the one account that I'm real excited about, my account here. But the issue is I control about 90% more of these shares because of the fund and the shares that are through the family office. So Riot is a cool 125,000 shares over here at a decent price, not a great price, but a decent price. And then I've also got 1.3 million in cash collateral tied up via cash secure puts at 11, 10 at 9 for 12.20. And then I've got all the shares for sale at 20 January of 2026. So I'm trying to grab the bag over here 5, 6, 7, 8 times. That way, when I look up and I'm underwater, $500,000 over here, I could just make a mathematical decision saying, hey, I made a shitload of money here. It's okay to let these shares go because, $20 times 125,000 shares is going to be a lot of money. You know what I mean? And it would be okay to get back into cash, maybe buy 200 to 500 leaps along the way and still participate in the upside and that kind of thing. So because Riot is such a hefty position across the board, and I happen to be very interested in Bitcoin, but I'm still very lean on my understanding of it in general, and definitely specifically. I mean, I can have a surface level conversation with you about Bitcoin, and that's about how far it goes. I can have a slightly deeper conversation with you about Riot because I've been to the corporate office in Irvine. I've been to the miner in Corsicana. I've talked probably a total of 3 hours with Jason Les personally now. So I feel like I got a much more keen understanding on Riot, and I just happened to be interested in it for various reasons. One, I played poker professionally. Jason was a top caliber poker player, so I was very interested in his background. And then when he became CEO in 2021, it really attracted me to the company because I already knew of him because of the poker world, right? So there was that connection. And then there's the connection that Riot does most of their business in Texas. I kind of understand the way politics works in Texas and the way that Riot has integrated themselves with the politics in Texas. They understand how the government rocks in Texas. Like they think they're above the United States government. So Texas means business, like Texas is very Bitcoin friendly, if you will. So I just took a personal interest in Riot. I feel like whenever they think of you, they think of the Tevis'S, they think of you, the Tanners. Y'all are kind of known as like the SoFi guys, right? Essentially, like fucking. Well, I'm saying more so even Tanner. Tanner wears the shirt that says the SoFi guy, right?
Yeah, no, yeah, absolutely. He's an
Data
absolute
driven, Chris Hager, data driven investing. I mean, this dude, I feel like he knows more about SoFi than fucking Anthony Noto sometimes.
Yeah.
And then you have Amit over here on the other side that I feel like he's a walking encyclopedia for Palantir, and he's turning into one with Robinhood.
Yeah.
And even CNBC in general, like this dude knows so much about so many stocks because he lives and breathes this shit all the time. And I haven't been invested in a company, Tevis, that I've been that interested in to learn that much about it. That makes sense, because my big thing is, can I make money off the stocks? At the end of the day, that's what we're here for. At least that's what I'm here for. But for whatever reasons, I became interested in Riot. But then I'm like, dude, I've never really gone on that archaeological expedition to like really dig into a company. And yes, I can read a financial statement and all the other stupid boring shit. I can thumb through a 10Q and a 10K and try to make some sense of it here and there. But I was hoping that maybe you could help me do this thing the way that y'all did it on SoFi Weekly to see like, what do we have here? Because I'm already bullish on the company and I've already made a shitload of money with it. So there's that. But I also feel like it creates biases that can be dangerous for me as an investor as well.
I was just going to say, so I think the benefit of me coming into this conversation is one where I have a slightly different opinion and I'm not really married to any particular name. I don't have a horse in this race. I'm playing Marathon, I'm playing Clean Spark simply because they're the two biggest in the space, and I'm playing them as a trade to make me money because this is a very cyclical space, right? Bitcoin has massive bull cycles and massive bear cycles, and the halving and all this stuff plays a role in that. So the macro, I think, is very important as a backdrop in this particular industry. And this is, I think, one of the reasons why I agreed to do this, because I'm interested in learning more about them as businesses and really diving a little bit deeper to see, okay, is there anything here for a long-term position, understanding the risks that it is cyclical and it's going to have massive drawdowns, that's not its own fault? Or is it just a trade for me? Like right now I have the trade on, I'm going to make money. I know my exit points and like, I'm all good there. I don't need any hand holding on that perspective. Like I have ideas of, hey, this is when I expect Bitcoin to be at this price. And as a result, this is my price target for Marathon and for Clean Spark. But I don't really know them in that level of depth because it's a trade. Bitcoin is about 20% of my portfolio. It's ballooned to become a behemoth. It's a monster now. And so that's really my horse. Is I'm just riding Bitcoin for my long-term position. Everything else is a trade. I have Coinbase. That's a trade. I'm going to get rid of it at some point. I have Ethereum. That's a trade. I'm going to get rid of it at some point. Solana, trade. And the miners are a trade for me. So with that said, I wanted to approach this very much from a first principles perspective. I know nothing about the miners. And so let's go into this completely blind. Now, I only worked on this a couple of hours before the show. And so this is going to be like a fraction of the story. But I really want to just present this and then we can chat about it. And then based on that, we can see if your opinion changes slightly and we can go on for, a deeper dive later on.
Yeah, sure. Yeah, of course.
Okay, so
I need to add something to the screen.
I'm just throwing up my screen. So I'm just working on a whiteboard here. I just like working on a whiteboard. It's cleaner for me.
I think you saw Mike and his whiteboard and you fell in love with the concept. The guy from Tasty Trades.
So, okay. First question I asked myself, if I'm looking at the miners, and granted I own 2 of them, and I don't know if they're the best ones to own. So the first question I said is, okay, how do you value a crypto miner? And I really said, okay, there's 3 things I want to look at first and foremost: exahash and growth, Bitcoin holdings, essentially the asset valuations, and the profitability of the miner. So what is the cost of mining? Now, what I haven't had time to do yet is essentially financial, stock ownership, dilution, M&A, growth prospects, like so much under the hood that I just didn't have time, but eventually we're going to get to those.
You said this is where like I actually know quite a bit about Riot. I used to be very familiar with the Marathon and Clean Spark, but I had to make a choice on this horse about a year ago, and I landed on Riot, but I was still willing to sell a bunch of cash puts on Clean Spark. Marathon just got too expensive to where I wasn't willing. It just wasn't in my comfort zone from a price perspective. And then I just wasn't very fond of a couple of things the CEO said.
So you know more about this second piece or this first piece?
I know quite a bit about all of them. Riot helps you out with all that stuff. It's on the presentation page.
Yeah, absolutely.
Yeah.
So, I mean, I think part of this is me sort of learning on the fly. So this is somebody who
I do know Riot's financials, like they have between based on what Bitcoin's valued in, like cash on hand is about 400 or 500 million.
Yeah. So I mean, we're gonna get to that, probably not in this episode, but again, this is somebody who knew next to nothing. I mean, I had a pretty like surface level knowledge, but next to nothing about these 3 specific companies from actually looking at their investor results. And so this is just, imagine me as somebody who is just, and this is the audience that I'm addressing is people who don't know anything about anything around these names and just going ground up, right?
Yeah, for sure.
So, okay, first of all, Bitcoin halving, I think we all know Bitcoin has 20 million supply, 19.6 million have been mined, 1.4 million left. The block rewards get halved every 210,000 blocks. So roughly every 4 years, the miners get half of the reward that they would have otherwise gotten. Why does this happen? So basically, if you're going to create this entire system of Bitcoin, like if I want to create a new currency, I'm not going to flood the market with it all at once because you won't reach adoption. So you have to spoon feed it a little bit to gradually increase that supply. And while at the same time maintaining that scarcity and preserving that value over time. And so you have this essentially this fixed schedule. This also incentivizes this proof of work mechanism whereby you're having these participants solving these problems to receive their rewards. And that's exactly what miners do, is they participate in this proof of work, and that's what the exahash thing gets. So what is exahash? It measures the total computational power dedicated to solving these cryptographic puzzles in the Bitcoin network. It reflects the security, efficiency, and the landscape across miners. So 1 exahash per second is 1 quintillion guesses. So I don't know if you knew that. That's 18 zeros. That's 1 exahash. So essentially, think of it as you're trying to solve a problem, and how many guesses per second can you do as a human?
Right. So you need really fast computers. Yeah.
Exactly. So you need really strong processing power. Okay. So the higher exahash per second, greater security. So you have more computational power. You have this mining efficiency. So you have essentially miners competing with one another to solve these puzzles, to validate transactions. And whoever gets the solution gets the reward. Okay. So more exahash per second is essentially more horsepower to have a higher probability of getting that reward. You're not guaranteed that reward, but you essentially have more guesses. So I put it in ChatGPT here. It's essentially like a lottery where all of these people are playing a game to guess the winning combination of numbers, and each guess is essentially a mining attempt. The more guesses that you can make, the more lottery tickets you essentially buy, and the higher your chances of getting that reward, right? Of winning that lottery.
Of course.
And so essentially here, exahash per second is a function of, okay, who is most likely to win in that network? Great. So miners are the lottery players. This is the speed at which they can guess. And this is the interesting part that, I found interesting while looking at this, is that the total hash rate is also growing. So because the network is growing, there's more participants in the network. Bitcoin's price goes up. It becomes more profitable for miners to mine Bitcoin. And so you have more entrants into the market. And then as technology gets better and you get more processing power through hardware and efficiency, you essentially have a higher hash rate over time because you have more horsepower, right? You can have a Ford Model T or you can have a Lamborghini. Which one do you think goes faster?
Right.
That's technological progress. And then you also have the investments that miners are making in their infrastructure and all this like energy efficient infrastructure as well. So the network growth is about 37% as of today. I just calculated today from today last year. Riot has here in their deck that it was about 59% increase. And my first observation is that, okay, if a miner is growing their exahash per second lower than the total exahash is growing per year, then they're going to fall behind eventually.
That's fair. Yeah.
That's just logic, right?
Yeah.
Like, you're falling behind in the race on an aggregate basis. And so essentially this 37% year over year, this 59% year over year for Riot's own deck becomes a hurdle rate because the market is growing at 59%. You have to be growing faster than the market in order to capture more market share. Yes. So that's issue number one. So that led me to say, okay,
hold on, back up a second. What was the global was growing at what?
So Q3 to Q3, Riot had 59%.
Right.
I just literally did today with today last year, and that was 37%. So it fluctuates, right? So I probably caught it at a dip. They probably caught it at a peak, whatever. So between 37 and 59, let's say.
But Riot is growing more than, 59 is more than 37.
No. This was the global hash rate.
No, that's Riot's numbers because I saw it on their books earlier. Riot's exahash grew 59% year over year. Like I can pull it up on the deck. You see, this is why, like, I'm actually familiar with their numbers, right? A little bit more.
Pull it up because I'm pretty sure I'm right on this one.
Yeah. So if I go here to their numbers.
Actually, I should have their numbers here on another tab.
It's under presentations.
Yeah. So I'm pretty sure I'm right, but I don't want to.
So this is where I got it. I don't know if I can show this real quick. This is where I got it from.
I'm on the same slide as you are.
Yeah, right. This one here.
Next one. Yeah. Okay. So that's the global 59%. Riot grew 159%.
Yeah, that's what I'm saying. I was like, I thought they crushed it, bro, because Jason was like bragging about it at the meeting. So I was like, where the fuck did I drop the I dropped the baton here somewhere. I thought I would have caught that.
Yeah. No, they did crush it year to date, but it's just something to keep in the back of your mind. So throw my screen back up.
Yeah. Hold on. Bear with me. I'm not like super savvy like you are on this thing. Here we go.
Okay, so I just pulled Riot's like latest numbers and marathons and clean sparks, and for the sake of simplicity, because I didn't have a lot of time, I'm just doing their latest numbers. So this is where we sit. So out of 670 or whatever we are right now, 40 exahash is marathon, 31 exahash is clean spark, and 28 is Riot. As of October 2024. And then my next question became, okay, well, what's the growth rate of each of these? And we see the growth rate here. So, and I got all this information by looking at all three of their investor relations, like their decks. So Marathon grew from 19 to 40, so 93%. CleanSpark grew the highest at 200%, so from 10 to 31. And then Riot grew 159%, so from 10.9 to 28. And then I said, okay, well, that's great. And this is their decks where they show that. And I said, that's great, but now where do they want to go? So they passed the hurdle rate last year, but what about 2025?
Yeah, right. It's going to get to like 48.
Yeah, so 47, but that's only 34%. So that's issue number one. So if the market grows at 37% and Riot is growing at 34%, and the market's growing faster than Riot. CleanSpark's at 56. I don't know what Marathon is. They said 50 exahash by end of year, but I don't think they provided a 2025 number. Again, I didn't have
they haven't. Jason talked about it.
They have not?
No, not yet. Not yet. It's been, and I'm not exactly sure why. There's a lot of rumors out there because right now the big thing is the HPC AI.
Mm-hmm.
So there's like a lot of companies that are potentially switching or pivoting in the Bitcoin mining space, and then also Marathon just did a convertible deal. So I don't know how that's going to work out, but Marathon's a player, bro. But I feel like Marathon is a very diversified miner. Like if you really look at them,
so that's the other thing.
I call them the Neo of mining. Like I'm real bullish on Neo, the EV company.
Mm-hmm.
But the thing that has me bearish on Neo is I feel like they have too many irons in the fire, and I feel like sometimes I feel that way a little bit about Marathon. But as of today, I've been very wrong on that aspect because they were the first miner ever to do 75 Bitcoin in one day. That happened about a week or two ago.
Yeah. So okay, if I'm looking at again this whole like little spiel that I'm going off of is these three pillars, right?
Sure.
If I'm looking at the first pillar, well, CleanSpark was the fastest grower in 24, and they're projected to be the fastest grower in 25. Just going off of their numbers, right? And that's again, this is the benefit of looking at this from like a completely zero perspective, ground up.
We're just looking at numbers. Yeah.
Okay, looking at the second pillar now, Bitcoin holdings and efficiency. So very quickly, the more Bitcoin you hold, the more value as Bitcoin goes up. I think that's pretty fair logic. Marathon owns the most, 26,000 Bitcoin. Then Riot.
They bought about half of those, though. Just so you know.
Yeah. So they purchased 6,200 in 2024, and 4,100 were through the convertible notes that they just did, I think, very recently. And then Riot has 10,000, and then CleanSpark has 8,700. And then I also looked at the mining. So in Q3, Marathon mined about 2,000 Bitcoin. CleanSpark almost 2,000. They had a monthly number, 655, and that might fluctuate. I just multiplied it by 3, really. So this might be slightly off if like they had a really great number in September or whatever, and they just chose to use that. But this is what they said, 655 monthly. And then Riot had 1,100 Bitcoin mined in Q3. So Marathon is essentially mining double what Riot is mining currently. And I think it's fair to say almost that, CleanSpark is also mining double what Riot is mining currently.
Yeah, at least 90%. Yeah.
Right. But Riot owns more, which is good. And nobody's really selling, which is great. Now, I looked then finally at the cost to mine one Bitcoin. So Marathon is 42,000 here per Bitcoin, and then Riot is 35,000 per Bitcoin as of Q3, and then CleanSpark was 34,000 roughly as of Q3. And then I also looked at this, which I need to dig into more. There was this post around some financial engineering. And this is like, if I could ask the CEO one question, as of right now, with my very, very basic knowledge, it would be this, because it seems as though there might have been some like regulatory credit type of situation here that affected their actual cost of mining. And so I really want to know what the true cost is of mining, like what they consider direct mining costs versus like the total costs and the fluctuations there, inclusive and exclusive of power credits, so that I can understand, okay, what are exactly the power credits? Because this, I think, will play in our bull case, right? Because if CleanSpark's actual cost to mine is like 60,000, or sorry, Riot's is 60,000, then of course, then that's changes our case, because right now we're saying, okay, well, they can mine more efficiently than Marathon, therefore they're a better horse in this race. And again, I think all of this really, so I'll just run through the initial thoughts. This is super basic, just today research, right? So total network size forms a hurdle rate. 37% is the hurdle rate. Block rewards are slowly diminishing over time. So that's like a macro thing. More dilution and spend on acquiring Bitcoin and holding. So they're basically buying Bitcoin and they're holding it. I don't understand how this, and this is just like my naivete right now. Like, I don't understand how this helps investors. My assumption is that they're all unprofitable. I haven't looked at financials yet for them. I'm unsure right now.
I think Riot's had a quarter of profitability, and I think that CleanSpark has also.
In 2021, I'm guessing.
No, this was like in 2023. You'll see it. There's one call. What's it? Whatever it's called, the little thing. It sticks out. It's like I don't know why. Maybe it's Bitcoin had gone up to like 66,000. I think it had something to do with accounting principles, with how they were able to report Bitcoin on the balance sheet or something to that effect.
Well, so that's the other thing. Like, I
There's
saw
a bit about tangible and non-tangible. This is where somebody like Bill White would be really helpful here, because there was something that happened with IRS codes a while back. And again, this is why I want to do this, right? Because I want to know this stuff, because I feel like I know of it, but I don't like know it, if that makes sense. But I know that something happened with the IRS not too long ago, and it's like became a tangible versus a non-tangible line item. And because it's like a lot of screwy reporting on with these miners, so it's very hard to like look at a cash flow statement or an income statement or whatever, a balance sheet even, and know what's real and what isn't real. You know what I mean? Because even like the share-based compensation, dude, when you get into that, because that's like the question that I asked Jason.
Yeah.
And I was like, bro, it just feels like I'll get paid a shitload of money. And he was like, dude, we have to hit like a lot of metrics. And he explained to me how it all worked. But on paper, it looks absolutely horrendous for us as investors.
Yeah. And I mean, look, I think that if we're forming a list of questions to ask Jason, like,
When I've asked a bunch of them, but I feel like, again, I was just having a conversation with the dude because we're cool. You know what I mean? I'm not like, like writing shit down or recording or anything. That might have been more helpful. But he is going to be coming on the channel at some point. So that's why I also wanted to launch the Riot Weekly and gain some steam, and we can get some traction. I think we could all formulate maybe 5 questions or 10 questions to ask him. I'll email them to him and be like, hey, can you come on the show and clear the air on these, because we're all very interested in the company. Not everybody's going to be as bullish as me, but dude, he's very forthcoming with the information, which is super fucking cool. You know what I mean?
Yeah. I mean, you want solid character, right, in a leader. But like, I guess a lot of the questions that I have right now are genuine questions. Like, they're not jabs. And they're also just questions like that I have across the board. Like, for example, how are they calculating revenue? Because my very basic understanding right now is that it's just unrealized gains on Bitcoin held and mined. And if so, like, isn't that just paper gains? Like, if Bitcoin goes to 30, aren't they like losing money? All of it. Like, it just seems like a lot of financial engineering on this side. So that's what I want to understand. Is like, hey, what are the true costs associated, and what are the actual, like, how do you guys pay your employees? Because you're holding onto your Bitcoin. So like, what do? It's paper gains, right?
Yeah. So they have did you look at the balance sheet or no?
No. And I don't want to at this point, because I want to have like a sort of.
So let me give you a little 2-minute bull case on Riot and why I'm super excited about the company.
Yeah.
and then maybe you can help me dig. But I want you to dig with a not a pessimistic eye, because those people never make money, but a skeptical eye, a cautious eye, right? So what I love about Riot more than anything is their balance sheet and their infrastructure. They have enough money to stay in business for like the next 2 to 3 years, fund all their growth plans till 2024 and 2025. No issues. They don't even need to dilute if they don't want to. Now they've gone through the route of dilution because it was the most responsible thing for them to do. Whereas at one point, Marathon chose the debt instruments because they were low interest, and they kind of like had some Bitcoin that they were backing that debt with and stuff. So they had like a bunch of Bitcoin on the hodl, but some of it was encumbered. You follow me? So they're not really in that situation anymore. Riot didn't want to go down that path. Now they are exploring. Jason told me, hopefully it wasn't in confidence, but they are exploring reasonable debt instruments for the first time, because they do have a substantial Bitcoin hodl. They do have a substantial infrastructure. They are aligned with the power companies, right? With ERCOT in Texas, and it's like, dude, like Riot's almost like an electricity company, dude. The way they're set up, the way their power structure is set up, the way that they bought all of these hedges on electricity, they could fucking provide power to like towns. You know what I mean? So they got other things that they could do, and they do for money. Like they have things that I'm not really exactly sure on. Like they have like an engineering company. They got something else that brings money through the door. They had some hosting that they inherited because they had taken over a company called Windstone that was in Rockdale. So essentially, they have this 700 megawatts in that's already fully functioning in Rockdale, but it doesn't really perform at optimum levels because it's older technology. Most of it's air cooling. They do have some immersion cooling, but then they're only about 40% of the way in Corsicana, and they're already mining, or they already have almost as much exahash at Corsicana than they do in Rockdale, and they have up to a 1 gigawatt in Corsicana, and they're also looking at acquiring more land. They recently bought Block Mining, I think it's the company out of Kentucky. So they're going to have some more growth going on over there. But they're also entertaining these possibilities with this new HPC AI because they realize how valuable their infrastructure is, and they could potentially pivot one of these locations if another hyperscaler or wherever writes them a check and the money's good for 7 to 10 years. Because you can't just pivot a Bitcoin miner and go do something else with these machines, right? Like there's a lot of infrastructure already in place, and to just turn the boat around, it's like trying to turn around the Titanic. You know what I mean? It's going to take a while. It's going to take a while. So I love their balance sheet. I love their growth plans. I love that they're real friendly in the community. They're already aggressively looking for other land in the area that's geographically compatible with what they got going on, because they got like warehouses of this shit already. Like all, and they have contracts with this I guess, what's it, Bitmain, I think, or Micro BT, whatever the supplier is for the miners. So they've got contracts already to get up to their levels, their ultimate levels, to get to 100 exahash. That's the goal. I don't know when it's going to happen. He's like, dude, if I had to guess, he thinks that they'd get there like 2028, something like that. So that's still a ways off. I don't know that their current infrastructure that's already in place can get them there. I think they would need to acquire more land, but they are really quick at putting these buildings up and online and getting the miners in there and stuff. So just as a Bitcoin miner, I do see a path to profitability and sustainability with Riot. But also what is attractive is if they can do something similar to like the CoreWeave, Core Scientific deal for billions of dollars, then that's a game changer for investors as well. Because the pain with all the miners is dilution, right? The pain with all the miners is, on the surface, I can see how they make money. If it takes 35 to mine and it's trading at 90, I can see how y'all make money, but where's the money? Because at some instances, they sell the Bitcoin. They used to, right? It was like a hybrid. They would hodl and they would sell to fund, to fund payroll and that kind of stuff, right?
Right.
But here, this year, they haven't sold any. So they don't have like a clear-cut way of doing it. It's just kind of like a feeler thing right now.
So yeah, I think and that's going to be a persistent problem across all of the miners. They're going to have to diversify their business model to follow somewhat that micro strategy route. And I found it interesting, right? Because like that energy piece is something that I was thinking in the back of my mind. It's hey, what can this be used for that's in another space that diversifies away from that Bitcoin inherent risk? I also find it really interesting that if Riot had was mining, let's say 1,000 Bitcoin every quarter and was selling that Bitcoin at whatever the market value was and was locking in those gains, they would be absolutely the lowest valued miner out there because people buy based on that future growth.
Right.
But that to me really aligns with your strategy. Like every miner is essentially having paper gains right now, and we both know that paper gains can go away in a bear market. And meanwhile, your whole strategy around like selling calls and selling puts is like, hey, a bird in the hand is worth more than two in the bush, right?
So stop right there, Tevis. Stop right there. Guys, the reason that I landed on Riot was because one, they are from Texas. I'm a Texan before I'm an American. But I did see that their strategy was going to take about 3 to 5 years to fully unveil and unfold. It was like a poker hand, and I was like, okay, I feel like we all have our whole cards, and we've seen a flop, but it's called a wet board. Okay, there's nothing sexual about it. A wet board can be, there's so many possibilities of hands that can play out, and we still haven't seen the turn, and we still haven't seen the river. When we have Jason come on here, we'll have this poker hand analogy discussion, and he can talk to you at a higher level than I can, because this dude is like a master at pro, where I was like pretty good. You know what I mean? I could make a living at it, but I couldn't get rich at it the way he did. You know what I mean? So it's a wet board. And I thought that Riot was going to get punished from a share price perspective. So I knew that there was going to be a ceiling on where this stock could go. There was already a lot of dilution, shelf offerings, etc. Right? So I was like, this is going to be the best miner for me to sell cash secured puts and covered calls on and let the story play out. And I just happened to be the most interested in the company. So Riot was the most conducive for my strategy.
Gotcha. Okay.
I knew that I could make a shitload of money with CleanSpark. So I did sell 1,500 cash secured puts on CleanSpark, and I made the $261,000. The thing is, dude, you can't help the girl that you're attracted to, if that makes sense.
Gotcha.
I'm just saying, dude, like investing is a lot like picking your spouse or significant other. For whatever reasons, you love the Tesla story and the idea and everything Elon Musk is or is not.
Yeah. I get it.
Investing is very personal. And a lot of times people try to make sense of, why do you like that stock? I don't like, dude, you don't have to. Nobody's telling you to buy anything here, player. I'm just telling you my journey and how I got here. But I sell puts and I sell calls and I roll when it makes dollars and cents. Collect a shitload of premiums along the way. And of all the miners, I wanted to make sure that one thing was for certain. Financially, they could not go out of business.
Right.
Because I needed about 3 or 4 years for those checks to clear so that I wouldn't get caught with my hand in the cookie jar on the miner that's filing for bankruptcy like Core did, because they didn't have their shit together financially. So you never heard me talking about that company. Because before I look at anything, I got to look at the money, bro. Does this company have money? A, do they make money? If so, when are they going to make money? You know, how much money do they have to work with? Because they're burning a lot.
Yeah.
And you got to look at those basic things before anything. Dude, I don't know how to analyze companies the way that you do, but I understand dollars and cents. And not cents. I'm talking about sense. I got a lot of sense. I got a lot of common sense. And for a lot of you fuckers in the chat, not to be a dick, but a lot of y'all are lacking some basic common sense at times. You need common sense in life and in this business. So I was like, okay, this company's got a lot of Bitcoin hodl and they got a lot of cash. ass because they've already kicked us in the ass with dilution.
Right.
And they had a massive expansion plan. They've got a dance partner in ERCOT that's willing to dance with them. Hey, work with me because I might need you to take your miners off the grid for a little bit to help us out. And they're willing to play nice with you. So there's a longevity there. And now that I've seen it, I'm like, dude, this company ain't going anywhere, bro. Like, I see it, dude. These employees, they don't have jobs, they have careers. So that's the stuff that I wanted to see. You know what I mean? I was like, so these people think they're going to be around for 5, 10, 15 years. They're a Bitcoin company. So in their mind, this is like the real deal. So then it became even more real to me. So I'm like, okay, cool. You already met the quota. Y'all are the easiest miner for me to wheel. But now I'm like, can I turn this into a freaking multi-million-dollar bagger for me now? So it moved up the rungs of the ladder because I saw more in a company than I expected to, if that makes sense.
Yeah, no, it makes perfect sense, dude. And like, again, I'm coming at this with a very basic understanding, and I just resort to logic because, you know, what I think just from hearing you talk about it is I think that trip to the facility made you a believer. Like it turned you into a believer because you had that intangible piece of actually meeting the people and seeing their reactions and seeing if it was genuine or not. And that's fair. I can't hate on that. I can't, you know, push back on that. But what I'm hearing from like a logic perspective is, hey, it's a wet board. What that means to me is I'm bullish on the prospects of the industry as a whole. Okay, great. That's one thing. Number two, they have a lot of cash. Well, okay, cool. Let's see who has the most cash. Therefore, have it. Like for me, if I was just investing because it's a wet board, I would just diversify across the top 3 players and call it a day.
Right.
But I think it's that intangible piece that you have that makes you a believer, like that Riot is your horse. And like I think that's totally fair. I don't think anybody can hold that against you. I just don't know. Like I'm looking at it very much from a black and white, like spreadsheets and papers perspective, right?
And then that's exactly why you're here, Tevis, because I think that like I'm not trying to form a Riot Weekly circle jerk. Not to shit on y'all's show.
Right.
But it's more fun when there's someone who isn't all in because they're willing to entertain the bear case. Sometimes I'm not even willing to entertain it. So if I just got another Riot bull here, I mean, what are we talking about here? Might as well just put on there buy Riot, scrolling on the bottom of the screen. You know what I mean? Like that's not what I'm about here. I want to legit learn how do you dig through these companies? How do you find all of this information? Because I look, bro, and guys, it's not as easy as going on Reddit and going on, and you got to source all this stuff. Like, how do you do all that? You know what I mean? Because you can go on an investor relations page. What's Riot going to tell you? We fucking suck. Don't invest in us. I'm saying, what do you expect to find on there? What do you expect to find? The shit that we're not that good at, we're trying to get better at. The shit that we're good at, we're trying to get great at. That's what you're going to find on any investor page. I mean, be logical, use a little common sense, right? But I'm trying to see, okay, cool. Can you help me make sense of the money? Because it's a bit ambiguous to me. And I've already had these conversations with Jason personally.
Right.
I was like, the one thing I will tell y'all, and I told Jason, one thing I did love about investing in Marathon is that I could go on anytime and tell you how many Bitcoin Marathon mined that day.
Right.
And Jason was reluctant to put out that number because he's like, well, we have a bad day. They're going to focus on that, but it could be a service. It's just something that they don't want to have to like talk about. So they were just like, we'll just give you the report once a month. And that's fair. That's how they choose to do it. It's just like, I want Robinhood to pay me money on some cash secured put collateral. They ain't doing it.
Yeah.
I'd like them to, because it's a lot of money on this portfolio and across the board, dude. I don't know if y'all know this about this little funky guy from Texas, but I control $250 million now of money that's on that fucking platform. And you know how many times I think, fuck you, Robinhood. Like, maybe I should just get friendly with Chuck. Like, dude, I'm just saying, dude, it bugs me, bro. Like, it legit bugs me that they don't give us that money.
It should, man. I think you can. Well, anyways, that's a different
That's not enough. I'm just saying that's not enough clout yet. You know what I mean? I don't have. They don't care about that. You know what I'm saying? But I'm just, and I don't know the intricacies, bro. I don't know how Charles Schwab does it. I don't know how the Morgan Stanleys do it, but they do it. Like, they do it, dude. Like, Bill White's shown me, Mr. Premium used to show me. Dude, they get paid money and they're in a casket put. So they got their money making money.
Mm-hmm.
And then their money's earning money on the interest side of things. The minute that you put your money to work in Robinhood, it no longer qualifies for the cash sweep.
So again, I'm just trying
to. We tangent, right? But I'm just saying it's just.
Well, let me bring us back because I'm just trying to pick up what you're dropping down, and to me, it really seems as though you're looking for reasons to be skeptical or to affirm you're wearing a Riot hat, like
no, I just want to know. I'm just being curious.
Well, so here's the difference, Ben, because like if you were talking with Jason, like if I were Jason, you would ask him all these questions and he would have reassuring answers. Whereas you're talking with me and I'm going to give you, because I have no horse in the race, I have no buy-in, and I'll give you like, hey, if this is bearish, this is bearish. If this is bullish, this is bullish. And I think we can have a more honest conversation like that. So as we do more digging together, then we can form an opinion. Because right now, like, hey, you have a crush on a girl, and I'm supposed to be the friend to be like, hey, man, sorry to burst your bubble, but she's this and that.
I caught her talking to this other dude.
Yeah, but no, it's like, dude, everybody hates that fucking friend, right? It's like you have a crush on the girl. You're like, this girl's perfect. She's amazing. And I'm like, actually, she's not that amazing because X, Y, Z. And you're like, go fuck yourself, dude. Like, what? Why are you ruining this for me? So I don't want to be that guy for you, for Riot. But I do want to like be a voice of reason if this is your emotions clouding your logic to some degree. Granted, you can't put a price on that intangible piece. So like if you go there and you talk to, a random worker there and they're like, hey, this is my calling. I love it here. I can't see myself anywhere else. Like, well, fuck. Like, how many charts do you want to disprove that feeling?
Yeah. No, dude, and here's the thing, dude. I'm very secure as a person. I'm very secure as an investor. Like, no one's going to talk me in or out of a position. I push the buttons and I live with the results. You know what I mean?
Good.
But what I'm saying is I do want to learn how to do due diligence. Like, how have y'all kept SoFi Weekly going on that fucking long? Because Bitcoin has news all the time. And then these miners, they have shit going on all the time. Like, I can tell y'all right now, there's a bottleneck with all the miners, and all of this growth plans ain't going to happen if they don't all get their hands on these fucking things called transformers. So it's all about transformers right now. That's the fucking game. Like, that's the cocaine, that's the crack that everybody's looking for right now, is these transformers. And that's the bottleneck in the industry, is the transformers.
Look, the what I can tell you about how we've been able to keep SoFi Weekly, and now I'm doing the same thing with HIMS Weekly. Like I'm doing a weekly show on HIMS, and I think we have like 7 or 8 episodes out right now, and it's just 1 hour a week. It all comes from repetitions. You're doing a 90-day challenge, you want to get jacked, whatever, repetitions, right? With SoFi, like I can make you a video, I can make you a bull case, and I can have all the prettiest charts in the world, and that will be old news 3 months from now because there's new numbers that come out. But by having to do a show about it and having to talk about it on a weekly basis for 1 hour, like you're forced to come up with topics. And as a result, you then do so much deep dives on it. Like I go on Reddit threads, I look on random Twitter threads. I have like a specific screener for whenever somebody on Twitter mentions SoFi, it pops up on my screener. And so that's how you get this like alpha. And the cool thing is, if you do it for long enough, people will tag you in random alpha to amplify it.
Right.
So like the research comes to you after a while. You don't have to go to it. But that only comes with time. And so it's just a commitment for you to be like, okay, Riot is the play that I want. And this is what I want to be talking about for 1 hour out of every week. And it's not only 1 hour because you have to do all the research that goes along with it. And over time, extrapolate that for a quarter or a year, and you're going to be a pro in no time. You're going to find like the randomest stuff that nobody else can find, because partially random people with like 10 followers find it for you, or they're employees of Riot that like anonymously talk to you on DMs, or you're like, fuck, I have nothing to talk about this week. Let's scour some Reddit threads.
Yeah. So that I hear you. So that is part one. So I'm trying to find you. I lost you because I was looking to see how much Riot shit I had on my tweet on my Twitter page or whatever, X page. I wasn't even following Riot. I only follow Jason. So I'm following Riot now, right?
Yeah.
So there's that. This is what's missing on SoFi Weekly and Palantir Weekly and Rocket Labs Weekly and HIMS Weekly. And this is what you're going to get on Riot Biweekly. Are y'all ready for it? Let's zoom in. Are y'all really fucking ready for it? Yeah, I'm gonna show you how to make money with the fucking stock. Because at the end of the day, that's what we're all here for. So I want to learn myself how to properly do the due diligence on the stock, formulate this investment thesis that I've already done. But at the end of the day, it's going to come down to, can I make money with this stock? Can I manufacture the win with this stock? If not, what the fuck are we even doing?
But you're already making money on the stock.
No. But there's new people that may be coming into the Riot space. And I want you to tune into this fucking channel, because every day I'm going to tell you, if I was playing Riot right now, this is my day one, even though this is my day 4 year, right? This is how I'm making money with the stock right now. This is how I'm playing the stock right now. Like, I'd be selling some cash secured puts at these levels. These are the plays that I have on right now. So I can use my full transparency, and then they can, do whatever they want to do with that information. But I'm just saying, like, nobody has any fucking clue how many shares you own of SoFi, how many Tanner owns or whatever. We're just all guessing, right? I have ideas with you because I know you more on a personal level.
Yeah.
But what I'm saying is, I feel like my level of transparency can turn Riot Weekly into Riot Making Money Weekly. You know what I'm saying? Like, let me put on $1 million worth of cash secure puts for you fuckers every week, and let me show y'all how to make money off of this stock right here, right now. This is where it's trading. I could do 15 to 20 minutes because I can geek the fuck out on technicals. I've never really done it on the channel because I don't really like to. But I'm just saying, technicals, as you've just found out here recently, they're very critical in this game as well. They have their place. They're real cool for entries and exits.
Yeah. And I think that, okay, so two things. Number one is you're going to get an audience, and half of the people are going to tune in for the making money part, and then half of the people are going to tune in for the Riot part, and then a very small percentage of people are going to tune in for both because they're like bullish on both, genuinely bullish on both. Some people just want to see a $10 million portfolio, how it trades up and down. They want to see $50,000 collected in premium, and they're like, fuck, I want to be like that guy one day. Like, that's just entertainment for, like, it's a mix, right? It's entertainment plus education. The other thing that I'll say is, and it's good that you're a very secure investor, because what this does is it really influences you and your decision making and your thought process when you start mixing content creation and investing. Because for myself, like, there's a reason Tanner doesn't show any of his positions or any of his buy and sells, because people start to influence your thought process. I sell, covered calls on SoFi, or I sell some like 10% of my SoFi stock, and all of a sudden, like,
they shit on you, bro. They didn't even know you had something better to do with the money.
And I'm like, dude, this is 35% of my portfolio. Yeah. I trimmed 10% after we jumped double in a month. And I've been talking about this motherfucker for 2.5 years. Like, what do you expect me to do? Like the Titanic, Jack, I'm going down with the ship. Like, so my point is that is, they're even commenting on it right now. My point is the content creation and the stock, like your financial decisions, that will like start to get mixed because you're so closely associated with one single name. Like, if you're talking about Riot Weekly, we're not talking about a girl that you like. Like, this is a marriage, motherfucker. This is a marriage.
Yeah. Well, I mean, at those levels, I feel like we definitely got an engagement ring on, right? She may be like my wife. We upgraded literally last minute, dude, like a month before the wedding. She was like, "Oh, I just wanted to see if we could talk about an upgrade." I was like, "I thought we were gonna do that on year 5." And then now she's hitting me with the other upgrade. So now the one we got married in is now going to be a pendant. And then I'm like, I picked the first 2 rings already, and I got shafted essentially. So you're gonna go on your own. Just tell me, just take the card with you. I don't even want to know at this point. You know what I mean? Because I'm just gonna be angry the whole time. So yeah, dude. So I want to be the guy, dude. I'm excited about the company. Obviously, I'm super bullish, but also I think, just truth be told, full transparency, it's what y'all get on this channel. One of the main reasons that I'm super bullish on the company is because I know how to make money with it.
Yeah.
Like, dude, this thing is a printing press for me. Like, if I need $20,000 that I got to pull out of the account in 2 weeks, I can go make $20,000 on Riot right now. It's going to take capital to do so, obviously.
Right.
But I'm saying I know that there's a $20,000 bill for me if I need it. And I can't say that on a lot of stocks, not even on SoFi sometimes.
Yeah.
Like sometimes I don't know. Sometimes I don't know how to trade SoFi. Like I've got covered calls at $18 for
Right.
December the 20th, bro. And they were like a legit looking at the chart, but it's like a legit gamble because if it gets to those levels, there's really nothing stopping it going from 2021, 22. I don't know.
Yep.
And I don't really have that kind of level of uncertainty with the Riot. We want to talk about the chart as well. I don't have that kind of uncertainty with it because I feel like there's a lot of even though there's tailwinds on the space right now, there's still headwinds. There's a lot of non-believers out there, and those are real good for people like me to like to sell very aggressive covered calls.
Absolutely, man. But like, so first of all, I don't disagree with anything you're saying. Like, I agree entirely. There's certain stocks that you are here to make money, and there's certain stocks that you want to hold long term. And hell be damned with the couple $100 or a couple $1,000 you're making in premiums. SoFi is one of them for me, right? Because I realize that, oh, wait a minute, the premiums are not juicy enough for me to be taking on this level of risk to get my shares called away or have the headache of having to roll indefinitely.
Yeah, I'm hoping I get in that situation with Riot, but I don't know, dude, because they've diluted a lot. I mean, did you even look to see how big the float is now compared to like 2020, bro? This shit's insane.
I took a glance. Again, like this is me 2 hours of research into Riot or into the sector. Let me say, with SoFi, I have like thousands of hours. Right? I don't.
Yeah.
It takes time. But I think that you're doing it sort of backwards, which is not necessarily wrong. Where like you have a stock, you've already been making money on the stock, and now you want to be talking about that stock and going even deeper. Whereas how we did it for SoFi Weekly was like, hey, we had a stock that we had conviction in. We went super deep into the research, and then only later did we start making money with that stock. And so it was a little bit reversed. And the thing that concerns me for Riot, and like, I'm down, dude, let's make more content. I like the research aspect. I want to learn more about this space. The thing that concerns me is that it is very cyclical, and there will come a time in, I don't know, maybe it comes in February, maybe it comes in June, where the market's going to pull back as a whole. And then your entire audience is going to be like, dude, I bought this thing at 12 and I can't wheel like TJ can. I can't manage the position like TJ can. And all of a sudden this thing's 5 because they don't understand the cyclicality of the market as a whole.
Right. Yeah. And I think that's where like I'm always coaching about managing your bankroll, like a big thing. Like, and we going back to like now the wheeling expedition of the wheeling escapades of Tevis. Bro, how important is bankroll management in wheeling? Like, I mean, how many of y'all give me a thumbs up if you understand that wheeling can legitimately be a business and it needs to be treated like a business if you want to make money. If you want to lose money, treat it like a hobby. But like, dude, I mean, you got to learn the ins and outs of your business and your cash flow and the cash in your register. If it's your little hamburger stand, like you need to know how much money is in that register, how much money is in the deposit box. What's the credit line situation looking with the credit card with the bank? I mean, you need to know your bankroll, bro. Like your bankroll is a position. Cash is a position.
And I think that's a skill to have, like, aside from wheeling, like, it's just another tool in your toolbox of, like, you being a good investor. Even if you are a long-term buy and holder, like, you need to understand that so that you can take advantage of the market volatility. Because, like, right now for me, if I were and I have cash on the side for, like, if Friday opens up to be a red day, I can take advantage of that red day. But if something catastrophic happens and the market's down 20 or 30%, I'm going to be caught offside because 80% of my cash is deployed. I have like maybe 20%. And so I won't be able to take advantage to that same degree. And so it is going to be a cost benefit analysis of like, hey, I'm churning or I'm yielding a percentage off of my cash because it's working for me versus the risk that I'm taking on for some unforeseen event happening. And then I don't have the optionality to be able to take advantage of it.
Yeah, dude, I think that I can teach them a lot with this right position, because there's going to be a time where you're right. Like, we're going to go into that crypto winter, and it's going to make more sense to play it long via leaps, because that's a fraction of the money. Free up all of that capital, let it tank, go sell cash secure puts again, because that's where the money's at. And it's just, I mean, you just got to learn how to. You got to know where you're at in the cycle and be on the right side of things. So there's a lot that you can learn whenever you're wheeling and or trading and investing in a stock, over 3, 4, 5 years. Like, dude, I've been in this thing since 2020. Since 2020. So I've seen the good, the bad, the ugly. I woke up to fucking, oh, here we go again. We're offering these shares. We're not going to use them. Well, fuck, every other time you said you may or may not use them, you used them. You know what I mean? Like, I mean, this dilution was all unintentional. So, I mean, it's just, I've seen it all. I've seen it all. And I've always looked at it as an opportunity, not just to grow the position larger, but this is another opportunity to make money because I'm adequately capitalized and I'm prepared. Like, I'm prepared, but I know the horse. Like, I think the thing is you can learn a lot about the horse, but you also got to learn how to ride the horse. Like, to me, like wheeling, like Tevis, I can leave you with one thing, because I got to go spend time with my wife because she's ill.
Sure.
Is I'm going to leave you with this. Wheeling is like a horse race, dude. There's the horse. That's your stock.
Yeah.
But another critical component, there's 3 components. There's the race, there's the horse, and there's the jockey. You, my friend, are that jockey.
Yeah.
And if you go to a horse race, if you've studied anything about the secretariats of the world, these are the horses. If you studied anything about the Willie Shoemakers, these are the jockeys. You can put certain horses and certain jockeys together and you have a winning combination.
Mm-hmm.
Not every jockey can ride every horse. It just does not work. I grew up on a ranch that raced horses, and I used to gallop the horses. So I learned that my riding style was better for certain horses on the ranch. And my buddy David, his riding style was better for other horses in the ranch. So my wheeling style works for the Bitcoin miners. It doesn't work for other horses. They don't suit me. I don't suit them. You know what I mean? So people spend so much time studying the horse. I spend all my time learning how to ride that horse. Because
So
at the end of the day, that's where I'm going to make the most money as a wheeler.
let me ask you this then, TJ. Like, is the reason why you're not in more miners simply a diversification thing?
Yes, because I have too much money in any type of financial instrument, dude. I mean, if we want to just look at this real quickly, because I do want to go check on my wife, because she's heavy.
We've been on for 2 hours, so I get it.
She's heavy on my heart right now. Because I mean, without her, dude, I ain't shit. I promise you.
Sure, that's for sure.
Bro, fucking my wife is just, dude, she's my heartbeat. But anyway, yeah, dude, I just feel like I've had too much money in companies that are all about money, if that makes sense. You know what I mean? Like fucking SoFi, it's a money stock. Like you get your little fucking bullshit sectors, whatever, it's a money stock. Riot's a funny money stock. Then we got Amazon, it's people spending money stock. PayPal is people spending money stock. Intel, they're hoping to learn how to make money again stock. Then we got Hood, it's people fucking gambling money stock. Palantir, we don't really know what they kind of know what they do now, but I'm just saying Palantir gives me that AI exposure. Then we got my 3 gambles over here. These are the swing trades. I got Neo. This is a Tesla wannabe that can't get their shit together. They got like ADHD, LMNOP. They can't figure out what cars they want to sell. And then we got Baba, that if it was Amazon, it'd be trading like Amazon, but it's Chinese. And then we got Pfizer. It's a stock I hate. It's a company that I hate. I can't stand anything about them, but I know how to make money with them.
Right.
I mean, that's the reality, dude. So I have some horses that I don't even like them in the stable, but they win races, if that makes sense, right? So I look at all these stocks like horses in the stable, and I'm like, okay, what am I using them for? I'm like, y'all have a lot of drugs in the pipeline. I know that y'all lost some patents and this and that, but y'all have a lot of stuff that's already in like phase 2, phase 3. And when that stuff starts hitting again, I could totally see a world where this thing's going to have a 3 or 4 in front of it again. And I'm like, I want to be along for that nice little ride. Right. And I happen to have a pretty damn good entry point on it. Not a huge position because the premiums aren't good enough to justify tying up that kind of capital. I had some cover calls at 25.50 that were getting challenged for this Friday. I did some more research on Pfizer last night, and I was like, well, at the very least, get another 50 cents out of the damn thing. Maybe even set myself up for a dividend. You know what I'm saying? And then just keep playing it 50 cents at a time, and make a few $1,000. Maybe you could turn into more. Maybe I'll double or triple the position, because what I like about this horse, because I don't like the stock, right? I don't like the company and what they stand for. I feel like they probably do more harm than good at the end of the day. They do some good though, so you can't disregard that. Is what I do like about the stock is it's real hard to envision at these levels losing any money long term.
Right.
So I like when the floor is here and the ceiling might be here or it might be here. I think y'all call those asymmetric bets or something like that, whatever y'all's fancy terminology is.
No, I get you, man. Like I have the same, plays in my portfolio. Like I totally get it. Right. I have gambles in my portfolio. I have stuff that I don't want to, like Marathon and Clean Spark for me. Like I know very clearly what my exit targets are, and I know very clearly what the catalysts are that need to hit those. I don't want to overstay my welcome, but I want to make money along that ride. So I get it. But I'll let you go be with your wife, and then we can talk about more Riot soon, because I want to, I think for me, I'm going to start reaching it more now.
Let's do another one in a couple of weeks, and I'll just start featuring it on Wheeler. So every other episode we'll do some Riot action, and we'll do Tevis'S the Chronicles of Tevis Wheeling or whatever. You know what I mean? But also, real quickly, I was going to tell you, dude, can you do me a solid on the thumbnail and shoot it over to me? Because mine, I couldn't find our old one, and I saw that you put a fucking daddy one up. Yeah, fucking nerds, bro. How do y'all even do this shit, dude? I swear. I have a little Alex that I give him a few bucks a month to help me out. My picture when I started this channel was a picture of my Jaguar and my son's Jaguar together. That's all I could come up with, bro. Maybe the bike in the middle. I didn't have anything. They had wheels. It was a wheeling channel. That's my level of creativity. You know what I mean? And Lord have mercy. Thank God for little Alex came into my life, and now we have decent thumbnails here and there.
I got you. I'll send it over.
Appreciate it, man. TJ the Wheel Deal signing off with Tevis from Fundamentals of Investing, my man. Appreciate you. Much love to you. As always, may your sky stay blue, stock green. Peace out. God bless you guys.